Hey guys, welcome back to another Bitcoin update video. It is the 8th of July today, and this is a very timely video because it is literally make or break for the Bitcoin bulls. So I've spoken at length previously about this lower median line of this pitchfork here being my invalidation point for the bullish move. Okay, I don't mind us wicking beneath, but ultimately, yes, we need to hold on to this level. And as you can see, we are right at this point right now. There's an intersection of pitchforks right here offering some confluence and support. So we're going to go into that. That's the shorter time frames we're going to address. Obviously, we've had the Mt. Gox selling over the last couple of Tokyo sessions, as well as German government selling of Bitcoin also. So that's added to the downward pressure. Whether that's going to get absorbed now by some buying pressure from the bulls, or are we going to see that continued downfall? That is key because, as I say, as far as I'm concerned, this is an invalidation point. Yes, there is a bit of further confluence at around 52k, a small order block down here that we could eat into, but it would have to be sharp and fast. As I say, we need to get back above this 55k region ASAP, because this is where all the confluence lies. That is the key level to hold on to. So we will also discuss the higher time frame outlook, just zoomed out on the weekly time frame. I've mentioned previously about a target of 170k this year going into the US election, and we'll go through that as well as the candle pivots, in particular on the daily time frame. Again, around this S4 level for candle pivots, we've got the 55k, which is still being held pretty nicely. Okay, but as I say, it does need to hold, and I think we're going to find out hopefully over the next couple of Tokyo sessions whether we are going to absorb this selling pressure or not. All right, so let's dive in. So it's probably worth just starting very quickly with the macroscopic outlook going on the weekly time frame. I've gone into this at length before, so I'm going to kind of rush through the higher time frame outlook. Ultimately, what we're looking for is a 5-wave move, Elliott wave move. So we've got our first wave, our second, our third, followed by our fourth. Now the fourth is a symmetrical triangle or converging triangle, where we have the A, B, C, and then the D and E. Well, the E wave is very short, basically. Okay. Then we go into our fifth wave, which I see as an ending diagonal. It's a very similar play out to what I'm seeing on the Dow Jones also. So of the ending diagonal, which starts here, we've got a first wave, a second. We're working on our third, which going into our US election. Then I'm expecting a fourth and fifth wave to follow that, probably going into around 2026. All right, so that's the general outlook, and there's a huge amount of confluence in and around this point. So we've got the extrapolated trend line here connecting the highs. That crosses this November US election time period at this point around 170k. And at the same time, we've got two more bits of confluence. We've got the upper warning line of the pitchfork holding this price action to the upside. And then last but not least, we've got our fib projection. If we draw a fib retracement from our high to our major low here, we've got the 1.618 fib projection also coming in there. So huge amounts of confluence in and around 170k. Hence the reason it is the target. Of course, it can be fine-tuned further down the line, but for now, it seems like the most likely target. However, for this move to play out, we do have to obviously hold on to the upward trend. And as far as I'm concerned, we need to hold on to this lower median line. Okay, I've spoken about it at length. I've spoken about how we don't necessarily need to visit the lower median line. Previously, I was speaking about a potential converge or ascending triangle. Clearly, that's not been the case. Maybe provoked by the fact that the Ethereum ETF trading has been delayed until expected later in July. Maybe that's allowed more selling pressure to take control and bring us down deeper within this larger consolidation. Who knows? But the point is, we are making a more extreme correction here, eating into these levels, but nothing that looks out of the ordinary for a larger bull market, okay, so far. But I do not want to see us lose this lower median line, okay? As I say, I don't mind wicks beneath. I don't mind a weekly close beneath. What we don't want is to spend a long time beneath this lower median line. At present, we're just sat around that point. The level sits around 55k at present, okay? And that's the reason I've mentioned 55k over on Twitter. That's the key level for me. Yes, there's more confluence down at 52k that we could tap. There's no guarantee of it, but yes, we could potentially visit that. All right. So yeah, the lower median line for me has always been key. Technically speaking, we can go as far as the lower warning line and still argue the pitchfork is intact. However, you can see the price action has been pretty well kept between the upper median line and lower median line, and so I would consider it rather top heavy looking if we break beneath this lower median line. So as it stands, we're good, but it's going to the wire here. It really does need to hold. Last couple of days, as you can see, if we go on the daily time frame, we've had some really intense sell-offs, and it has been during the Tokyo sessions, no doubt due to the Mt. Gox selling, basically transfer of Bitcoin back to its clients, who are then obviously selling because they've been locked out. They're locked away from their Bitcoin for long periods of time, and obviously you've got a huge amount of gains to profit from. So there is that quite intense selling pressure. But with us coming down to these levels now, I believe it's going to be seen as a bargain, and so I'm expecting bulls to jump straight back in and absorb all of that selling pressure. But it needs to happen, and any further major drops beneath this lower median line, I would be concerned for Bitcoin. Okay, so there's two pitchforks that I've got on the chart. There's the bigger one, which we've just spoken about. Then there is this one. This is just holding the price action for the correction. So we've got our first wave, our second, and our third. Now I would label this now as a WXY. Obviously, previously I was talking about the ascending triangle possibility, where it was going to be an A, a B, a C, a D, an E, and then we go up. Obviously, we didn't hold support around here, and we've made another dip down. As I say, multiple possibilities for that. It's the Ethereum ETF. There's the speculation for the Mt. Gox sell-off. And then the German government also jumping in on the bandwagon with the selling pressure. Yeah, lots of fundamentals that can suggest why we've switched to a different correction to the WXY rather than the possible ascending triangle. But you've always got to be mentally prepared for the worst case scenario. And I was always talking about how invalidation is the lower median line. So there was always that possibility of coming down into this point. And so that is now what we're doing. So it's max pain, huge sell-off here, loads and loads of liquidations. All the stops that were under here have been taken out. So it's an intense sell-off. Of course, on altcoins, we've seen even more intense sell-offs. So that's as far as I'm concerned, from a bullish point of view, that's kind of what you want to see before we resume a bull trend. You know, that max pain, everyone getting wiped out, smart money taking over the positions of retail. Yeah, that's the kind of usual narrative that we get before any major bull market. Okay, so now that we've got that, combining with the fact that we've got the Ethereum ETF on the near horizon, we've obviously got the Bitcoin ETF kind of priced in now. We've had the recent halving, but the impact of that is likely to still affect the market for several years. There's every reason we can continue the bull market. All right, so as I say, looking at a WXY, reason being is it's three waves, and then another 3 waves down. Now, if we look at the time between W and Y, we actually get a very nice one-to-one relationship that occurs pretty much to the day on this day. Yeah. So if I just show you that fib time, so from the start of the W to the end of W, extending it from where the Y starts, you can see to the day, literally. On this day, we have got the one-to-one. This is the one-to-one relationship, by the way. It might be just obscured by these icons at the bottom of the screen, but this line here is the one-to-one relationship. Okay, so very nice time relationship there, with the W wave lasting exactly the same amount of time as the Y wave. Okay, so that's one very nice and kind of textbook scenario there between the W and the Y wave in terms of time. On top of that, as you can see so beautifully, we've got an intersection here of lower median lines of two pretty large pitchforks. We've got the major pitchfork, which stems all the way back from November 2022. Yeah, so I'm not sure how many months, close to 18 months, that this market has been moving along this pitchfork. So that's a high time frame pitchfork right there. And then you've got this intermediate pitchfork, which is just holding on to the consolidation. You can see very beautifully again. We broke down, retested the median line, and then we've first of all using the upper median line as a bit of further resistance before then using the median line as resistance, taking us down to the lower median line. And now, as you can see, the bodies of the candles still on the daily time frame remain above these intersections. That's ideally what we want to see. Daily and weekly candle closes above this 55k region. As I say, I don't mind too much if we get a daily close beneath. Ideally not a weekly close. That would be more concerning, because we do need to hold on to 55k. As I say, we could still get another dip down, and okay, if it goes beyond this, yeah, that's concerning. Or if it's spending more than a week beneath 55k, that's concerning for me. Okay, so if it comes down, it has to be fast. It has to be a fast wick, and then it gets shot straight back up. That I don't mind. But coming down beneath this, let's say 50.5, or spending a week beneath 55, those are the two red flags for me that I don't want to see. Okay, so as I say, it's make or break now for Bitcoin. Are we going to start absorbing these Tokyo sell-offs that we see? Who knows? Tonight we might get a better idea. So there's all the confluence. I did mention the Camellia pivots. So Camellia pivots are hugely instrumental for Bitcoin in particular. I've used it across other markets. They don't work as well, but for Bitcoin they are really, really useful. I'm going to bring it on here. So we're going to start on the weekly time frame. We're going to take off everything else and just expand the chart so we can see it better. So on the weekly, so yeah, obviously finished the previous. So when we're on the weekly time frame, these periods represent 1 year. So the previous year, 2023, we finished well above the R4 level. Yeah, now this was our R4, and then going into this year, 2024, we've absolutely flown higher straight away, straight off the marks, and then through the R4, I used it as a bit of support, and now we've actually broken through that support and got a weekly close beneath, which is a little bit concerning. Okay, that's one slight concern I have. So I want to see us reclaim this R4 on the weekly time frame pretty soon. Okay, but the lower time frame, so if we go on the daily now, where each period here represents a month, you can see we are clinging on to the S4. Okay, as you can see, all the body candles. Sorry, the candle bodies are above the S4 at present. It's only wicks that have gone beneath, which we can tolerate. Okay, as you can see previously here, S3 acted as wonderful support back here. Then it was the R3 that took us straight back down. You can see here we went in and hit the so what line is that? The S3 as a bit of resistance. And then we've just flown down to the S4. Yeah, so far we're just seeing that kind of a zigzag type play. As I say, I'm labeling it as a WXY rather than a zigzag as such, because of the 333 wave nature. But there you have it. So this is the confluence of support that we're looking at. I am mindful that if we just very quickly, I was trying to stick onto one chart, but if we just look at the Ethereum BTC chart, that is important. Okay, let's get the pitchforks on here, because obviously we're trying to time alt season here, and what we want to see is Ethereum showing strength relative to Bitcoin. Now, so what we want to see is this chart continue an upward trend if we're going to see Ethereum strength relative to Bitcoin. Now, the question is obviously strong uptrend all the way from September 2019. Then big correction. Has the correction completed? As far as I'm concerned, there's a very strong argument that it has completed. Yeah, so first of all, we've got a fib retracement. So from our low to our high, we've retraced to the 0.382. We're on the log scale, okay? And then we've got the shift pitchfork very nicely tapping into the lower median line. So as soon as we get that confluence, 0.382 fib retracement and the lower median line getting hit, we've got that really nice impulse to the upside. And what's nice also is the resultant price action has looked very corrective coming down. Now, I have to say, it does look like it hasn't quite finished its downward move. You know, you would anticipate here more of a zigzag completion, so at least taking out this low. So I have a feeling here on the daily time frame that we might just have another dip down. Okay, and it's another reason why there is that potential for Bitcoin to come down to 52k, because this kind of downward move with alts coming down relatively stronger than Bitcoin could continue a little bit longer. Could we have another bit more selling tonight with during the Tokyo session, which then makes us dip a little bit lower, takes the Ethereum BTC chart beneath this low, and then we can say we've completed that kind of double three to the downside. and then we might have the argument for a strong upward trend here to continue. That is the point at which we might be able to consider alt season, where Ethereum is showing strength relative to Bitcoin, which usually then precedes the altcoins also showing their relative strength. Okay, so that's what I'll be looking out for. So if we just pull up go back to Bitcoin now. So I've mentioned the main key points here, the intersection of the lower median lines, the daily S4 Camarilla pivot. Yeah, this one right here. These are the main bits of confluence of support. There is a fib that we can look at. So again, it's all about looking for the confluence, because that's where all the kind of automated trades are going to be made. So we can look at this. You know, if we're looking, I mentioned we're looking at the ending diagonal where we've had a first wave, a second, we're working on a third, we're going to get a fourth and a fifth to follow. Sorry, it's probably better. So just looking at the Bitcoin index chart, I've got more annotations here where I've got all the kind of confluence here. So this is the Bitcoin index chart rather than the Bitstamp chart that we just had on a moment ago. Just showing you here, so it's got all the labels of the waves, which is a bit nicer. So the ending diagonal is a 1, a 2, a 3, a 4, and a 5. So if we're looking at that, the ending diagonals are 3, 3, 3, 3, and 3. Okay, that's the sub-wave count. So far we've had a kind of this has already been a 3-wave move up, a first, a second, and a third. Okay, now I see this as it's going to be a double 3 to the upside, basically. So we've had our first 3, we're now going to get another 3 moves up. So we're going to have a first, a second, and a third wave. So that's the kind of nature of it. I'm expecting 3 further sub-waves to the upside, which can then be broken down into a double 3, basically. Yeah. Now it kind of looks a bit disproportionate, but that's what happens when you get into these higher time frames. Obviously, on the log scale, price gets squashed together. But obviously, the big move is this leg here. This is a move from 55 to 170 that needs to be made. Okay, so it's an absolutely humongous move right there. So it's all disproportionate, of course, on the logarithmic scale. But I'm expecting another 3-wave-ish move up to here. That completes our third wave of our major fifth. Then we expect another fourth and fifth to finish our terminal fifth. So slightly complex, but yeah, that's the general outplay that we're looking out for. But time will tell. As I say, we need to hold on to this point. Yes, I've mentioned we could hit this little bit of consolidation down here. If we do so, it needs to be fast. It needs to be a wick on the weekly time frame that does that, and then we need to the selling needs to be quickly absorbed by the bulls. Okay, so I think that pretty much rounds up everything I wanted to say. We've kind of thrown in a little bit of fundamentals there. Haven't mentioned the dollar. If we just pull up the dollar, that is looking pretty weak right now, which is also helps the Bitcoin, obviously being priced in dollars. So yeah, we were kind of following this pitchfork to the upside. It did look very corrective, and then we've broken that pitchfork. We broke the lower median line here, which is the first sign of weakness, and now we've broken the lower warning line. So I expect this to start selling off a bit more rapidly now, and that obviously also works in the favor of Bitcoin. So let's see how it plays out. We're going to find out very, very soon, you know, whether bulls are going to step in here, but they really do need to, because if they don't, as I say, I would be concerned. So let's suppose we do get a weekly close. At present, I'm thinking a weekly close or a move beneath this consolidation at 50K approximately, move beneath there. I wouldn't hold on to a long position, okay? And I would probably re-enter once we got back above this lower median line, or at least above 55K, okay? So I'd basically not try and catch the bottom. A lot of people try and knife catch, trying to keep catching the bottom, and you're never sure that this is going to continue to be a bull market. It could actually just keep plowing to the downside. Who knows? Okay, so you can't keep buying. You've got to have you draw a line somewhere where you're going to say enough is enough. I'm going to accept. I'm not going to get the best risk reward, but you know, from a safety point of view and a longevity point of view, to save my account long term and to be a trader in the long term, I'm going to draw a line as to where I'm going to allow price to come down to, and I'm going to accept that I'm only going to allow it get in again if it comes back above a certain level, and for me that would be 55K. So that's the kind of safety net that I would be applying here. That's the way I'm approaching it. All right, guys, I think we're going to wrap it up there. Take care. Thank you for your attention in watching through to the end of this video. Now, I know there's a lot of you watching that would like to learn how to confidently trade the financial markets independently, and I also know how confusing this can be regardless of how many stressful hours that you put in. For that reason, I've put together all of my trading knowledge in a complete course titled The Works. The Works consists of thorough and jargon-free lessons broken down into a comprehensive curriculum, providing you with a holistic understanding of the markets and giving you an accelerated journey to being able to analyze and trade the markets all by yourself. And for those of you that are looking for my weekly detailed video analysis on crypto and stocks, then there's Cryptology, which is a subscription that will also give you access to the Works while subscribed. For more information on what's included in the Works or Cryptology, you can head on over to wave618.com, or alternatively use the links in the description to this video for a limited time 50% discount offer. So I hope to see you on the other side, but in the meantime, if you would like to sample some of my educational videos, then you can check out these videos that you can see on your screen right now. Thanks once again, and until next time, take care.